We've seen a dramatic jump here in earnings right out of the box. But again, so you have 31.4%. If you drop down to information technology, you can see that it's up 63%. Now, of course, we're early. There's only 6 tech companies that have reported. So the question here is it as good as it gets? Accelerations in earnings growth and revenue growth equate to what? Expensive stocks getting more expensive. And to me, Netflix was the best looking stock in our risk range product to begin with. Point number 2 is really China and Europe slowing, but I'll just say China slowing first because we have the chart that shows you that the Chinese stock market is a certified train wreck right now, down 14% since that peak in that chart in January. So it's a massive drawdown. The Chinese stock market looks like China data does. So again, they made up their GDP number again this morning on headline. They didn't move the number versus last quarter, but again, if you look at the components of the number, and again, monthly industrial production growth, for example, or anything really in China, it's been slowing. So I think the locals got that, and that's why the locals sold Chinese stocks. Point number 3, copper. Copper, look at the chart, series of lower highs. Looks bad, it's down because China's down this morning. Again, this is not a good thing to be long, so we want to be short it. 3 consecutive lower highs off a pretty bubbly lower high from a long-term perspective, which was back at the end of people chasing the chart. Don't forget why China and copper had a great run, because China had the biggest stimulus in the history of China. And now that's the comparison. So no mas on that.